Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York. It is Wednesday, 19th day of September 2018, and this is the daily report for gold and silver. Gold did close higher on the day, with most active December's contract gaining $5.60, currently trading at $1,208.60. However, when we look at recent activity over the last 6 trading days, what really defines this market is the fact that it has had a total of 3 trading days that have resulted in higher pricing when compared to the open, and 3 trading days where it is closed lower. In other words, we truly have a tight and defined trading range, a narrow trading range, as we get closer and closer to next week's Federal Reserve meeting. Silver closing higher on the day, gaining about 8.5 cents, closing at $14.27, with both palladium and platinum also showing gains. The greatest gain on the day has been palladium, up $23 at $1,028. Now, this was all accomplished with some nice tailwinds from a slightly weaker U.S. dollar. Dollar currently down about 0.1% or 10 points at 94.12. When we look at the equities today, we can see that there were some fairly strong gains, 158-point gain in the Dow Jones Industrial Average, closing at 26,405. The Standard & Poor's also closing higher, but nominally higher, fractionally higher, up about 0.1% at 2907. However, the NASDAQ did close in essence unchanged, but it is red today because it closed down 5 points at 79.51. Traders, as we look at this daily candlestick chart, a couple of things become quite apparent. First of all, we have substantial resistance on the technical basis just above $1,218. We can see that over the last, say, 3 or 4 trading weeks, there have been a couple of attempts to breach that ceiling, and all 3 of these attempts have resulted unsuccessful in closing above that price point. At the same time, when we look at recent activity from the end of August, and that was the last time that the market actually touched these lows at approximately 1190, we can see that the range itself has been compressing, and most recently we have seen the market characterized as a series of higher lows and lower highs. And as we get to the apex of this compression triangle, the idea behind it is that energy is getting stored and will be released at that apex. In other words, we will see a large spike one way or the other, either to the upside or downside. Now, traditional thinking in terms of a compression triangle is that the market will break to the prevalent direction of the overall trend, which we have to say when we look at a longer data set has absolutely been down. The market has been selling from the highs of $1,370 down to $1,164, with major support at $1,178. That, of course, is the 0.78% retracement, and major resistance at the 0.618% retracement, or $1,218. And traders, when we look at our weekly candlestick chart, we can absolutely see how tight of a range the market has been in. The last time we had any kind of wild swings was back in the week of August 13th, in which the market opened above $1,219 and then closed at the absolute low of this year, roughly at $1,164. Since then, we have seen the market trade above $1,218 only on one occasion. It is for that reason that I believe we will continue to see gold pricing trade within this narrow range for the remainder of the week and up until the beginning of the FOMC meeting scheduled to commence on Tuesday of next week. Therefore, for right now, my recommendation is to maintain our current short position as well as our current stop. We are looking to exit the trade if we can get a little bit of profits. And traders, although we can say that gold and silver have been trading under pressure and recently caught in a very narrow and defined range, the same cannot be said for palladium. Although palladium sold off when gold sold off, this being the week of August 13th, in which it hit a low just above $800. It has effectively closed this week above $1,000, currently at $1,028, after experiencing a $23 rise today. It has truly been an historic price ascent in this precious metal. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.